All right, we back. Welcome back to variation number 3. Okay, we are going to cover again double bottom. The only difference is this double bottom is gonna go past our zone. All right, so if you look at it right here, you kind of see it. So I'm gonna drag it and bring it across for you, right? You know what? I'll draw it out for you. So just so you understand what I'm talking about. Okay, so variation number 3 again is just like every other double bottom. Sometimes there's just a bit more flair to it, right? So we have our first bottom, right? So we have market selling, right? Boom. It stops here. Okay. It stops here. And then it went up, it started going up. Okay. Just like so. All right. So since it stops right there, what I'm gonna do is I'm gonna mark this area as a key level or a zone. I'm gonna place a line there. Okay. That's a key level. Right. It just means because it stopped there. That's our zone. All right. Now, the purpose of this zone is for when market come back to it. So we'll look for it to do exactly what it did last time, which is to go up. Okay. So here we go. When market comes back down, right? Instead of stopping at the line, right, the exact turnaround point, it went a little bit lower. Okay. Now it's still a double bottom, right? Because okay, it's still a double bottom. It just went a little bit past the zone. Now, just like number 3, where we had the wick that went to the zone sometimes, where it bounced off of it to come back up. But when you look at it with the line chart, you don't see the wick, right? Because that was a stop line. It's as if it never happened. Right. So now I'm gonna go ahead and of course show you this in more detail. That way you could understand it even better. Right. So let's pull this up real quick, right? Where we get a double bottom, right? That fell a bit lower. Okay, so I'm gonna show you like 2 different variations of that real quick. Now, what we have here is a bearish trend. Market is selling. Boom, it stops. It consolidate or it sat there, and then it goes right back up. Now, before I continue, I want to make sure I'm gonna repeat the same thing again. These setups, okay, the technical analysis or setup is going to be and always has to be based off the month, week, or daily time frame. All right, because we use the highest time frame to do our technical analysis. All right. Now, you see, market stops there. It went up. So when it comes to drawing my zone, right, it's straight across. But you see how it dipped a little bit below, and then eventually to give me my bullish engulfing. Now, this bullish engulfing is a 2 bullish candle engulfing, where it took 2 bullish candles to engulf the last bearish candle. It's still within the zone. It's just that it sold a little bit more. All right. Now, that is variation number 3. Again, when you get to the next phase, you will see that happening a lot. So now what I'm going to do is I'm going to go ahead and help you understand how it can still be within that zone, right? So sometimes we're going to come right back to it again. Let's go back to our original sketch. Sometimes, right, the last selling candle, right? I'll clean this real quick. The last selling candle may look like so. Okay. Boom. And then boom. Right. And then with a long extended wick. Right. And then we got a bullish candle. Let's move that back a little bit. Put like right here. Okay. Right. And then we got a bullish candle. Okay. Boom. Boom. Right. But when it comes to drawing your zone, we already know that the zone start from the close of the last selling candle, right? we're going to cover that also. I know we have not covered that, but just so you understand, when you draw in your zone, it starts from here, right? And then also when you highlight in the wick of it. So, right, the turnaround point starts here, okay? And then you identify the wick, meaning which is the lowest the market went. And then you identifying it along with where exactly it stopped at. So combined together will be your zone. Now, when you look at it, right, it looked like the market went lower. It went past the zone, meaning it went past your turnaround point. Okay. But it's still within the zone if you're paying attention. Even if it did continue like just a little bit lower, right? It's still within the zone. So in a way, sometimes it may look like this. Okay. What we're gonna do is we're gonna generate the selling candle, right? Sometimes the last selling candle may look like this because it broke, but it's still within the zone and it generate a wick like so. Okay, let's put a little bit of color to it. It will have a wick like so. But guess what? It's still within the zone itself. Okay, it's just again, sometimes it goes past the turnaround point. All right, not every double bottom is always going to look the same, right? And typically, a lot of time you get a 2 to 3 candle bullish engulfing. What I mean by that is, a lot of time we get 2 candles to engulf or 3 candles to engulf the last selling candle where you will take the buy to go up. Okay, that's just a typical common price action that we'll get when the market comes and give you that type of setup. Now, when it comes to a price action, we already went over that. It could have easily been a 1 candle price action. Okay, but that's still a double bottom. All right, so these are the most common or top 3 buying setup that the market typically will give you. Now, when we go to number 4, right, it's going to be a bit more tricky, but it will be close to the same thing. All right. Now, again, just like before, for every single setup that we cover, your homework, right? Your homework, please, 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 is for you to draw an illustration of the double bottom where the bottom is somewhat lower, right? So if you pay attention to these, right? Equal bottoms, one is a bit higher, one is a bit lower, okay? It's for you to do just that. Now, if you do them just like so, I'm okay with that. Please understand this is your work, right? The more effort you put into it, the better you're going to become. Don't be in a hurry just to draw it out and be like, okay, hey, I did it, right? But also, I need all the information that I need to understand. I need to know all the information about the setup itself. I need to understand that, hey, right? Yes, this is a double bottom where the second bottom, right, the second hit is somewhat lower than the first hit, but it's still within the zone. Okay, it's just that it went a bit lower. It's the same concept of getting the wick, like so, right? We got a stop hunt where it looked like it went so far and then it come right back and then to continue right back up. So I need to know all the information about it. Now, even as far as saying putting a line here, right? Telling me this is a selling trend or selling market or the market is falling, and putting a little line here telling me this is bullish trend or market is buying up, right? Just telling me what that is. Okay. Um, right here, vice versa. You would tell me, hey, this is a downtrend, right? It's selling, going towards the zone, right? The more information you give me, the better it's going to be. Now, when it comes to here, of course, I need you to tell me, within this, I will look to the left, right? The reason we look to the left is to see what it did last time. So we can anticipate for when and if the market gives us the same thing that it did last time before it went up. So we could go ahead and join it and join the market itself. So that would be, of course, our price action, the action that the market took or to give us that indicate we are going to go up. So we look to the left to see what it did last time. So when it does the same thing again, so we could take the buy to go to the upside. All right. Very simple, straight to the point. So these are the first 3 common typical ones. All right. Now, I'll see you guys in on variation number 4. Okay.